If you enjoyed this video, be sure to hit that sub button for more amazing content. Now, let's jump straight into the video. What's good, YouTube, and welcome back to the Bofina One podcast, and I am your host, Bofina One, and yes, it has been a little while. A lot of life circumstances have come up, so I haven't posted in quite some time, but the goal is to try to get back on the grind. And so as you guys can see here, what I'm going to be talking about for today is U.S. home buyers in trouble as mortgage interest rates reach record levels since 2002. So you guys all know about kind of what's been going on with the housing market. Interest rates have went up, right? So people are not buying as much. That's why you're starting to see more people are staying where they're at. They're renting, and that's why we're starting to see like rent prices have begun to increase because of this. And so with that, interest rates are going up. And the whole point, for the Feds to keep raising interest rates to try to help beat inflation, to slow down, in a sense, people buying. And, me, I'm in the market myself to be looking to buy something. And, it's definitely a factor. But you do kind of have to weigh both things of, okay, a lot of people are not buying. Is this a good time to buy or is this not a good time to buy? But let's get straight into the article. This is a short article. I just wanted to get on here and go through it. So it says home ownership aspirations in the U.S. are facing a considerable hurdle as mortgage interest rates have surged to their highest point since 2002. The average interest rate for a 30-year fixed-rate home loan has now reached 7.09%, marking a stark contrast from just a couple of years ago. The abrupt increase in rates is a direct result of the Federal Reserve's aggressive moves to curb inflation by raising interest rates. In a span of 2 years, mortgage interest rates have more than doubled, significantly amplifying the financial burden for prospective homebuyers. For instance, the monthly payment on a $350,000 home, assuming a 20% down payment, has escalated to $1,880 compared to the considerable lower $1,159 in 2021, with interest rates remain below 3%. And so this is kind of what I was saying, that a lot of people, it's kind of pushing them out of this market. That's why a lot of people are just saying, hey, we're just going to keep renting and we're just going to keep saving up to maybe get a bigger down payment in hopes that, the interest rates will start to come down some. The only issue with that is, and I can see it from both sides, right? If you wait until the interest rates go down, then you're going to have this large influx of people that are going to, essentially buy, because you're going to have the person that's going to have a bunch of cash because they've been, holding out, right? Then you're going to have the other perspective of the person that maybe has the 20% down, but not like a whole bunch of cash to just buy the house outright. And so, they're going to be kind of, I think it could kind of go both ways, where you could kind of be screwed either way, because if you buy now and the interest rates are high, people say, oh, we'll just refinance. Yes, that is true. But maybe with the high interest rates, maybe you can't necessarily afford the mortgage right now. And maybe you may not be able to hold out that long until the interest rates go down. I mean, they're saying the interest rates may not go down till like 2020, like end of 2024, maybe 2025. So that still is like 2 years of paying a higher mortgage, and maybe people can't really afford that. But I do understand the perspective that if you wait until the interest rates plummet, but the other argument is that the homes right now, like prices of condos, townhouses, single family homes, are all just really high. So that also needs to kind of come down, because I think a lot of people that are putting up their, homes and stuff now, it's a lot of people that, kind of saw what was going on, right? In 2020, 2021, where people were getting a bunch of money for their houses, but that was also with lower interest rate, So like even just a 2% difference could be $200 less on your monthly mortgage. So anyway, but that's a different discussion. So Robert Diaz, the chief economist of the National Association of Home Builders, voiced concerns. A lot of buyers have been priced out. If you don't have access to substantial parental financial support for a down payment, the road to home ownership becomes exceedingly challenging. Notable, the ramifications of the escalating interest rates extend beyond potential first-time buyers. Existing homeowners are also hesitating to sell and upgrade their homes due to the prospect of higher mortgage interest rates. These further explain homeowners with existing 2 or 3% mortgage are in no rush to list their homes, given the potential for higher mortgage costs. This has led to a staggering 50% reduction in resales inventory compared to anticipated levels. And so that makes sense too. People that bought their homes 2020, 2021, when the interest rates were really low, they're kind of like, hey, yeah, we can sell for a lot. But, let's say we use that money for a down payment on a bigger home, we're going to end up having a much bigger mortgage, and it might be almost to the point where they can't afford it. So that makes sense too. The National Association of Realtors chief economist Lawrence Yun echoes these concerns, stating that the limited number of homes available for sale has led to a considerable drop in home sales. In June alone, sales of existing homes plummeted by 18.9% compared to the previous year. The surge in mortgage interest rates closely correlates with the upward trajectory of a 10-year Treasury yield, which has also witnessed a recent ascent. This rise is attributed to growing expectations that the Federal Reserve will persist in maintaining higher interest rates in its bid to rein in inflation. The 10-year yield hit 4.3% just a day after the release of the minutes from the latest Federal Reserve meeting. As homebuyers grapple with the new reality of elevated mortgage rates, the housing market's future remains uncertain, raising questions about its resilience in the face of mounting financial challenges. And so, that's the thing, is that if you're not somebody that has a lot of, down payment, or maybe you're not someone that has the best paying job, you're kind of in a cookie right now. But then at the same time, if you're still renting, on the other hand, you're probably still having a hard time, because you're also going to have to you're going to have to worry about your rent going up every single year. So it's a lot of different things right now. I just think the whole housing bubble is or the world is just kind of up in an uproar. And so, I know a lot of people have said that it is good to buy. I guess if you can withhold or withstand until you can refinance, yes, because if you're going to wait, I believe, until like everything just plummets, or they call like a housing crash, you're going to have a lot of people that have been saving that are, waiting for that moment. So I still think even with the potential housing crash, or not even a housing crash, but like the interest rates going down, you're going to find the same thing is going to happen like it did in 2020, like when the interest rate, people were putting in offers for homes, but they were overpaying. And the reason why some people were overpaying, because they knew the interest rates were so low, right? And in the end, those people still kind of ended up winning, because if you look at how much homes have appreciated in the past few years, those people, even the ones that overpaid, I think they still ended up coming out on top. But let me know your guys' thoughts about this down below in the comment section. If you enjoyed the video, be sure to give it a thumbs up, comment, share, and subscribe, and I'll catch you guys in the next one. Peace.